demand zone creating, liquidity creating, liquidity taking out its own high, demand zone having a reaction, and you can hit insane trades like this. Those are my top 3 confirmations to enter a supply demand zones. So the demand zone to be creating, you need it to be untapped. So as you can see here, this is a completely untapped demand zone. And what is a tapped zone is, for example, this zone right over here. As you can see, it is tapped by this bearish candle right here. Let me show you another example. This zone is already being tapped. As you can see, so it has to be an untapped zone. And what you also need is a strong push up before the demand zone was creating. As you can see here, we had demand zone, we had a strong push up, and then that makes that demand zone valid. It doesn't have to be extremely strong push-ups. As you can see, like this zone here is like valid as well, and it also won off this. Well, that was probably news. So let me show you another examples of tapped zones. This here is already tapped, and this is a untapped zone, and so on and so on. Also, liquidity being created. So normal supply and demand traders, they don't usually have liquidity. So this is what I have in my strategy. This is what normal supply and demand traders look for. All right, just a demand zone and a reaction. So what I look for is a strong push up, same as normal supply and demand traders. Then what makes my strategy a bit different is having liquidity above your demand zones. And for a supply zone example, having liquidity below your supply zone. As you can see, this is extremely important. Having liquidity in distance and a decent low. And after that, you need it to take out its own high. And on a supply zone example, taking out its own low. So in distance, for example, JPY pairs, it's 30 pips max. So as you can see here, this here is completely valid because it's just 10 pips away from your demand zone. But let's say if it were to be like this far away, which is 55 pips, it's not valid because it's too far. And the 30 pips is max it's allowed to be from your zone. And the second thing is, it needs to be like a proper low. So for example, if this here did something like this, had this one candle, took it out, and then came like this, it is not valid. It needs to be minimum 2 candles in your direction. So if it did something like that, that is even valid. It's a little bit of a weaker liquidity, but it's valid since there's 2 candles in your direction of your demand zone. Having liquidity like this, and then very important, if it takes out its own high. So this right now is not valid. As you can see, this trade is completely not valid, and the trade only becomes valid after it takes out this point. So after it comes over here, this is valid. So if it reached that, now this trade is completely valid. What it does up here doesn't really matter. So if it comes downward structure like this, is not good, obviously, because it's making bearish structure to the zone and also just having a higher probability of having a fake out. So if you have like candles like this, then why not can it make a fake out like this? But in this case, what it did, it went a bit higher, did some things over there, took out the high once again, and also took out this high, which makes it even better because then trend is obviously extremely bullish. As you can see, we were stuck in this place for a while. We failed to take out highs many times, and then once we took out these highs, we are looking to take buys, and that is extremely important to be in trend. That's about 60% of your trades comes from like trends. So if you don't know how to analyze trades, go watch my other video about that. I made a advanced market structure video. But let me actually explain the top 3 confirmations to what I look for. So number 1 is having a clean demand zone, which is untapped, a decent level, and having a strong push up before the demand zone was created. Then having liquidity in distance, a decent level of liquidity, and that's number 2. And then, well, number 2 comes with liquidity taking out its own high as well. So as you can see, this is taking out its own high. I'm going to show different examples as well. And also by the end of this video, I have made a quiz so you can test your knowledge on what you have learned inside this video. And also, this is taking out its own high, as you can see. And as you can see right here, this is a normal supply and demand zone, as you can see. And normal supply and demand traders just got stopped out here. Then it came to my zone, which is below all these stop losses. Below here, below here. This is where all the big banks want to enter from, because this is the actual price where everyone is waiting for, because you have so many stop losses sitting under this liquidity, and once it takes it out, it's a liquidity sweep, not a liquidity continuation. And then once it has that, you look for a perfect reaction. And that is my number 3 confirmation, is having a reaction from your zone. So what I mean by that is, if it goes below this demand zone, it is completely invalid. At some point, if it wicks through it, or if it goes straight by a very small amount, it's completely invalid. And in this case, it came really close to it, but it did not do it. Then what you need is price to only react with the wick. So if this candle, if the body closed slightly in the zone, that is invalid as well. So that is completely important as well. So you got demand zone creating, that's number 1 confirmation. Liquidity creating and taking out its own high. Then having a perfect reaction from the zone, and then you can enter trades like this. So in this example, it's a flip entry. That's my entry models on this trade. And a profit target for this would just be probably in these highs all the way back over here. I'm not actually going to explain that. As you can see, just round over here, and then you target for a 1, 2, 8 and a TP2 probably up over here. But let me explain it on a different trade. Let me find the supply zone example so you can understand on a demand zone and on a supply zone example. So here I have a completely valid supply zone. As you can see, it's a small structure trade, but you can still understand the criteria. As you can see, you had 3 candles in the direction of your supply zone, which is my liquidity. This liquidity does not become valid if it doesn't take out its own low. So this took out its own low, also disrespecting this demand zone. As you can see, it closed inside the zone, which makes it now invalid. And that means we are most likely going to react from this supply zone. But if we did react from this demand zone, then this supply zone would become lower quality. As you can see, that is all I need for a trade to be valid. I have a nice level of the supply zone. As you can see, a strong push down right before that supply zone was creating. Then a wick inside the zone. It didn't go through it, or it didn't close inside of it. This is a break of candle entry and a 1 pip above deepest wick that went inside the zone. So this is the deepest wick that went inside my supply zone. And then I have 1 pip above this on the supply zone is below the lowest wick that went inside the zone. And that is, or if price wants to come and retest it. So as you can see, that's 4.4 pips. I'm going to go to a 5.4 pips. Just if it wants to come back down and have like a retest or something like that. And a profit target, either target this low, or you can go, I'm going to go for a maximum like 1 to 8. And that actually hit perfectly right here as well. It did continue lower as well, but this is just perfect. I mean, look how this like plays out. Just all bearish candles. And the reason it runs for like crazy like this is because all the big players, they got all orders sitting right on these supply zones and demand zones, because they need liquidity. As you can see, imagine how many stop losses are sitting above this liquidity right here. And once it gets stops out, then we are the ones who enter, and then we can hit insane trades like this. Let me show you well, actually there was a trade right here as well. And there was another supply zone here as well. They're all valid. This strategy is just a bit insane. And there was also a trade right here as well. That's an accuracy zone. And that's how I draw out my accuracy zones. I'm not going to go too in depth in that. You can watch my how to draw supply and demand zones. As you can see, this did completely invalidate it. But it did not invalidate it once it gave entry. So this is the entry. Stop loss 1 pip above the zone. So that's 8.6 to 9.6. As you can see, you did not get stopped out. And for this trade example, you then on a break of candle entry model, have a 1 pip stop loss too. So that's 8.5 to 9.5. And as you can see, liquidity in distance, liquidity taking out its own low and having direct movement to the zone and having a reaction. Same thing over here, you have liquidity in distance. And the zones are not tapped. As you can see, none of these zones are tapped. And you have a strong push down before that zone was created. As you can see, you have a break of structure over here. Liquidity taking out its own low. So that's a liquidity sweep. Then you have liquidity right here. Took out this. And then also trend is bearish as well. So this is a perfect level of a retracement. And you have insane trades like this. But obviously this here is news. But even if it wasn't news, you had a break of candle entry. 1 pip above the deepest wick that came inside the zone. So that is a 13.7 to 14.7. You have a decent level of a supply zone, strong push down right before that was creating. This here is your liquidity in this example. That's it taken out its own low and then direct movement to the zone. And then you also had this trade right here as well. These trades are all completely valid. And as you can see, here's a perfect example of where liquidity is not valid. As you can see, the trade as you can see, did not tap the zone, I believe. Well, it did actually tap the zone by a very small amount right there. And that is valid. That is a valid entry, but it's not a valid trade because there's no valid liquidity here. There's no 2 candles in the direction of your demand zone. So that is not valid as well. Let me show you let me try to show you quickly another example right here. So for example, if you had a demand zone like this is not valid. It's an accuracy zone here. It's not valid because the trade is already tapped. So if it did something like this, had not tapped the zone, made valid liquidity, made bullish structure, and then came to the zone with direct movement, it will be completely valid trade, but it's already tapped. So this trade, whatever it has over here, it's not valid because this zone is already been tapped and already big players are already in that trade, so they don't want to come back and fill those orders. And as you can see, once you have fair value gaps all in front of these zones as well, so you had a big push up, and that is like a magnet. Imagine how many orders are waiting to get in from here. You got imbalances in the market and you have a supply zone, so all the big players are waiting for these zones, and then they enter here and you have strong push downs like this. Now it doesn't get better than this. As you can see, you got another supply zone right here as well. It is just insane, I have to say. Now this is a completely would not even take this trade because as you can see, news was just pretty much ruined this trade. But even if it was valid and this wasn't news, then you had a break of candle entry right here and a stop loss of the deepest wick that came inside the zone. So as you can see, usually on Euro USD, the max distance your liquidity is allowed to be from your zone is 15 pips. So if this here was, as you can see, this here is just 2 pips, so that is completely valid. But if it was like 15 pips, it is completely invalid, and that includes the stop loss as well. So on JPY pairs, my max stop loss is 30 pips, and on Euro USD, my max pips of stop loss is 15 pips. So I wouldn't put 1 pip above this, but if I would, then it would be this wick, not this wick, because that's the deepest that came inside the zone. So here in the example, I have a 15 pips max stop loss and a take profit wherever I'll put my take profit. I'm not going to analyze that, but as you can see, accuracy zone right here. Well, this news did actually ruin the trade. Otherwise it'd be a completely good trade to take. And as you can see, I found another demand zone example here. Now this trade did lose. Well, it could have taken a break even, but it wouldn't be a trade I would take anyways, because like I said, trend is the most important one over here. And you can just see that this is pretty much going to lose for a guarantee. As you can see, it's making structure like this, have a strong push down again. And this is just making the exact identical move that it made here. And that's exactly what happens. So you can't expect the price to just push up from here. Other than that, it is a pretty clean setup. You have a untapped zone, as you can see, just like this. There's no bearish wicks inside this zone. And this here, this is allowed. As long as this bullish candle is not bearish, it is completely allowed. As you can see, clean level for demand zone. This is your liquidity. Liquidity taking out its own high, then coming down with good momentum and having a flip entry on this example of an entry model. And yeah, here, let me show you another example. As you can see, this is a clean demand zone. You have multiple levels of liquidity, 1, 2, and 3, but these 2 are the major ones. And as you can see, it does not become valid once this point. And as you can see, even this liquidity took out its own high. Now this is the major high, but you can also consider this as liquidity taking out its own high. But I'm not going to consider it because these 2 are my major liquidity. Took out its own high, untapped demand zone, had a perfect reaction of a directional close. As you can see, I would enter on the first bullish candle to react from my demand zone. As you can see, just a directional close over here, have a stop loss of 30 pips max, and then hit these insane trades like this. Also had a fake out, as you can see, for normal supply and demand traders, and that's the reason why I don't trade normal supply and demands, because you're just getting stopped out like this, and it comes directly to my zone, which sits below all this liquidity. And that's about it. So my 3 confirmations to entering a trade is having a valid level of a demand zone or a supply zone which is untapped, then having a liquidity creating, which is a completely valid, like a low or a high, which is minimum 2 candles in the direction, and it's supposed to be in distance as well. So for that liquidity, it also needs to take out its own high or low. And then my third confirmation is having a reaction from your demand zone or supply zone. So as you can see, if this, I would not enter right here. I would enter on the first bullish candle to react from my zone, and on a supply zone example, I would enter on the first bearish candle to react from my supply zone. As you can see, I would not enter here. I would enter as soon as it gives a bullish close. I would enter on a directional close here, 30 pips max stop loss, and just target probably this gap fill or that high over there. So those are my top 3 confirmations. Now let's get into the quiz. Is this a valid trade? No, because price not formed a valid level of liquidity. In this case, it's just a 1 candle liquidity, but it's without a fake out. Is liquidity valid in this case? Same here. It's the no valid liquidity. As you can see, it's just 1 candle, so it's not valid. Is this a valid trade? No, because liquidity did not take out its own low in this example. As you can see, this liquidity is a bit too far and is not even valid. Well, it is valid, but it is very, very weak. And this liquidity did not take out its own low, and it also came up with bullish structure. It did win, but not a valid trade. And is this trade valid? No, because price has broken through my supply zone, which makes it not valid anymore, because it needs to react with the wick and not go through our zone. Is this trade valid? Break of candle entry here, and yes, it is valid because it just has valid level of liquidity. Just a valid loss here. Is this a valid trade? No, because liquidity once again did not take out its own low. As you can see, if this took out this low, it would have been completely valid. Let me know down comments below how many you got them right. And for last, is this valid zone? And it is not, because the zone is already been tapped by this bearish candle. So let me know your score in the comments, and I'll see you in the next video. Thank you for watching.